starting the week with an 85, 90 point higher open than Friday. New vaccine, positive comments from Powell out of the weekend. They had to do this, and you don't see it on this chart. I'm going to show it to you. They open up a lot higher. They had to work on shake. If they're going to grind higher and be in the grind that we've been in the last 30 minutes, you're going to have to, when you open up that much higher, oftentimes you're going to have to go down before you go up. The reason for that is you got X amount of longs in the market at any time. At what point do you shake them out and get less longs? Why are less longs important to go up? Because if you have less longs, you have less sellers above. And this is a concept that's back of your hand if you know what you're doing, and it's not if you don't. Less longs equal less sellers. We'll put the algebraic equation here. Less longs equal less sellers. If you have more longs, you have more selling above. And it's hard to go up when there's a lot of selling in the book, whether it's the price of a stock, a t-shirt, or the S&P 500. So right in here, you have to know something that happened before this happened to really set us up in a grind, and ended up rallying net from 34. They just came off the 52.75s here going into Europe's close, but they rally them 16, 17, 18 handles. 18 handles. It takes forever to go 8 ticks here and there, and then you just grind up 18 handles. And through it, it's telling people that you finally achieved the less longs equal less sellers moment in here, inside this yellow circle. How do we do it? And let's just walk ourselves through it. It's easy to say that after the fact. It's not while it's happening. First of all, you talk about the time that it takes to identify a winner, which is a consolidation chop that you had forever in here. Then you get a breakout. Then you get a retest of this long chop, and it holds, and you start walking back up. And at this moment, I said inside this circle, there are less longs than inside this circle. And you came out of a long fight and a long chop, and you had a strong day coming in, and you shook out a lot of longs that were weak or that were late because we opened up 85 higher. And if it doesn't keep going up a lot, fine, but this is your best chance to do it based on those things. How long was the fight before you designated a winner? What kind of test did you have to shake out some late longs and break out longs? Because you don't want them along for the ride. They create too much selling above. And just think of this as a forest. It's hard to navigate through a forest if there's too many trees, but if you have a path cleared, then it's easy to move through and walk up through the jungle. Turn the jungle into a forest, create a path. And that's what markets need to do, and that's what charts could help you understand when you're reading them properly. In fact, that's the proper read of a chart, is when did it show you when a path has been cleared to go up or down. In this example, up. And when you have a lot of longs, you have a lot of sellers. It's called a crowded trade. You ever heard that being said? I just explained why a crowded trade, if there were too many longs in that trade, why it can't go up until you shake out some of the people in that trade. They were able to do that from the 8:30 Central Open, from like an 85, 90 point higher session that we started. You shook them out, and then it took forever to fight sideways, go up, come down, test it, re-rally, cleared the path. So just remember, when you read a chart, you're always trying to assume and accurately predict, accurately assume to, and when there are less longs, a shakeout of one side or the other. Start thinking how you feel when you're long or short and project that onto the market. Other shorter time frame, even retail traders, day traders, and such. It'll help you immensely in your ability to read a chart. So when I say this a lot, so that when you're right, it doesn't feel like a good guess.